Employee or contractor? It sounds like a simple question, and businesses answer it every day, often without a second thought. But it is one of the most frequently misunderstood areas of Australian tax law, and getting it wrong can cost hundreds of thousands of dollars. I am Tin-Lok Shea, tax lawyer at Australian Tax Experts. In the next few minutes, we will look at why the distinction matters, how the High Court changed the test in 2022, why workplace law now gives a different answer to tax law, the superannuation trap that catches even genuine contractors, and what to do if your arrangements might not survive an ATO audit.
4 markers show what is at stake. $500,000 plus, the amount the ATO assessed against a single business in one classification audit our office handled. We will come back to that story. 2022, the year the High Court reset the legal test, putting the written contract at the center for tax purposes. 2024, the year workplace law went the other way, adopting a whole-of-relationship test under the Fair Work Act. And $495,000, the top penalty for sham contracting for larger businesses, or 3 times the benefit obtained if that is higher, per contravention. Classification is no longer a paperwork question. It is a boardroom risk. Why does the label matter so much? Because it switches on, or off, an entire set of employer obligations. For an employee, the business must withhold PAYG tax and remit it to the ATO, pay superannuation guarantee contributions, provide payslips, comply with workplace laws, and report through single-touch payroll. For a genuine independent contractor, most of those obligations fall away. The contractor generally looks after their own tax. Though keep an ear out for the superannuation exception coming up shortly. And if you get it wrong, the business becomes liable for all the PAYG withholding that should have been deducted, all the super that should have been paid, plus penalties and interest, often stretching back over multiple years. And here is the uncomfortable part. Good faith is not a shield. The liabilities apply even where the mistake was entirely honest. For decades, courts decided these cases by looking at the whole relationship, the contract, plus how the work actually happened day to day. In 2022, the High Court changed that. In personnel contracting and JAMSEC, the court held that where the parties have a comprehensive written contract, the characterization turns on the legal rights and obligations in that contract, not the label the parties chose. Calling someone a contractor proves nothing, but the actual rights and duties the contract creates. How the relationship later plays out matters far less for tax purposes, unless the contract is a sham, has been varied, or is otherwise ineffective. The ATO has adopted this approach in Taxation Ruling TR 2023/4, which now governs how it assesses PAYG withholding and superannuation. The practical upshot: your written contracts have never mattered more. Within that contract-first framework, the familiar factors still do the analytical work, assessed through the rights and duties in the contract. Control: how much say does the engaging party have over how, where, and when the work is done? Delegation: can the worker subcontract or send someone else in their place? A genuine right to delegate points strongly towards contracting. Tools and equipment: does the worker supply their own? Financial risk: does the worker bear the commercial risk in the result and stand to profit from efficiency? And the independent business question: is the worker genuinely running a business of their own, serving the market at large, or are they working in the engaging party's business? No single factor decides it. The weighing exercise is exactly where these disputes are won and lost. Just as everyone adjusted to the contract-first world, workplace law changed direction. Since the 26th of August 2024, the Fair Work Act determines who is an employee by reference to the real substance, practical reality, and true nature of the relationship, a whole-of-relationship test that looks well beyond the written contract. Which means one worker can now get 2 different answers: a contractor for tax purposes, but an employee for workplace law, with minimum entitlements, leave, and unfair dismissal protections attached. And critically, clearing the ATO's test is not a defense to a Fair Work claim. Each regime has to be checked separately. If your classification review only looked at tax, it is only half done.
Now for the trap that surprises even careful businesses. You can classify a worker correctly as a genuine contractor and still owe them superannuation. Under the superannuation guarantee legislation, a person engaged under a contract that is wholly or principally for their labor is treated as an employee for super purposes. Genuine contractor, correct classification, super still payable. And no, an ABN does not change it. Invoicing through an ABN does not switch off the super guarantee rules. Miss those contributions and they convert into the superannuation guarantee charge, the shortfall, plus interest, plus administration fees. And unlike ordinary super contributions, none of it is tax deductible. If you pay contractors mainly for their personal labor, this rule needs to be on your radar today.
Where does the ATO concentrate its contractor compliance work? 4 sectors come up again and again. Construction and the building trades, with their long subcontracting chains. Personal services, massage, beauty and cleaning businesses, where workers are commonly engaged as contractors. Transport, drivers, couriers and freight operators, a sector currently under a joint ATO and Fair Work Ombudsman spotlight. And digital and creative services, designers, developers and media contractors. If your business sits in one of these sectors and engages contractors at scale, you should assume your arrangements will be looked at eventually and prepare accordingly.
Let me make this real. A massage business in Melbourne engaged its workers as contractors. The ATO audited, argued the workers were employees, and assessed the business for PAYG withholding and superannuation guarantee charges of over $500,000. Our office took on the defence. Through a detailed analysis of the actual working arrangements, how the workers set their hours, took commercial risk, and ran businesses of their own, we demonstrated that they operated as independent contractors. The matter was resolved in the taxpayer's favour, with the ATO accepting that the majority of the workers were genuine contractors. The lesson: these audits are winnable, but the right evidence, assembled early, is what changes the outcome. There is a sharper edge to all of this: sham contracting. That is where a business deliberately dresses an employment relationship up as contracting to avoid employer obligations, and it contravenes the Fair Work Act. The penalties were increased substantially in 2024, up to $99,000 per contravention for small businesses, and for larger businesses, the greater of $495,000, or 3 times the benefit obtained. The defence has narrowed too. Since the 27th of February 2024, an employer must show it reasonably believed the arrangement was contracting. Honest ignorance is no longer enough. And enforcement is live. The ATO and the Fair Work Ombudsman announced a coordinated sham contracting crackdown in March 2026. Deliberate or careless, the era of soft consequences is over. This is core territory for us at Australian Tax Experts, where tax lawyers and accountants work as one team. We run classification reviews, testing every arrangement against both the Contract First tax rules and the Fair Work substance test, because passing one is not passing both. We draft contracts that hold up, agreements built to reflect and protect the true nature of the arrangement, and we defend audits with proven results, including that $500,000 assessment resolved in the taxpayer's favour. Whether you want assurance before the ATO calls or representation after it has, we can help. If you are concerned about how the ATO or the Fair Work Ombudsman would view your contractor arrangements, talk to us before they come to you. Visit australiantaxexperts.com.au/contact for a confidential review of your arrangements. Thanks for watching, and remember, this presentation is general information only, not personal tax or legal advice.